only chart pattern that I would ever use. We're gonna go over the only one that I would use. There's millions out there. There's probably billions out there. But I'm gonna go over the one that I would only use. This is the one that I've used before. It's worked wonders. And I'll tell you exactly which one it is. So you can stop wasting time with all this crap and just have the best one. Straightforward. So you can start making money. This is an example of the profit and loss that I made from this exact fucking chart pattern. Okay? It works. It's the only one I'd use. I would not waste time learning anything else. So let's begin. Let's teach you what it is. So the first thing to do is stop. You see this thing on the right? I fucking hate this piece of shit. Look at this paper. Chart pattern, blah, blah, blah. And you can see all of these 15 different like patterns that don't even fucking work. Don't print this out. Don't stick it up on your bed. Don't try and memorize this. And bro, you know there's people out there who literally buy chart patterns? Like they buy them? I didn't know this existed. One of my friends was like, hey bro, I was looking at this guy and he was selling his chart patterns. Like, should I buy them? I was like, what? Buy chart patterns? What is this? Like, this is the new cash grab. Every couple of months, someone comes along. It was NFTs, crypto, all this. This is the new chart. This is the new cash grab. Chart patterns. You have to buy chart patterns. You have to buy them. Like, this special chart pattern works very well. Buy it for me for $5,000. Listen, if someone's selling you a PDF for like $5, it's like, okay, whatever. If someone's selling you a PDF for like $20,000, this is the best. You're getting scammed. So just stop. If you see anybody, this is what I want you to do. I want you to do an exercise. If you see anybody printing chart patterns out, I want you to go up there and I need you to slap them in the face. We need to stop this epidemic. We need to stop this. I went to my friend's room because he's kind of getting into trading because he saw me, I was making money and he was like, fuck, let me try. It didn't work too well. I went into his room and above his monitor, he had like 15 pages of chart patterns, just sticky tape to his wall. And he was like, oh bro, look, you see the pattern on the top left? Which one? Oh, that one right there. Yeah bro, look at the chart. It's like the exact same. Like I think it's a buy signal. Oh. Just don't do this. Don't embarrass yourself. Like don't be that guy. Alright? Just don't be that guy. So that's the first thing, to stop. Okay? Stop. Don't print this out. Don't waste your time with any of this crap. Right? If there's a cheat sheet with like 2 or 3 or 5 that kind of work, that makes sense. If there's a cheat sheet with like 15,000 and it's for $10,000, don't do that, bro. Just don't. Okay, so before we continue, quick heads up. I have my free trading bundle, completely free. It has a free course, it has ebooks, it has a template, it has a trade tracker. It's so much stuff, right? Click the first link in the description to check it out. It's completely free. If you're a beginner, if you're not really sure what to do, you're kind of lost, whatever, check this out. It's very beneficial for you. First link in the description, go check it out. So anyway, which one is the best then? Right? I mean, that's what you're here for. Like, which one is the best? There's like 10,000. Tell me which one is the best. Now, what do we need in like an ideal like chart pattern? If there was one ideal chart pattern, what would it have? Right? What are the characteristics? Well, one thing it should have is that it should work a lot of the time. So it should have a high like win rate. You don't want an indicator. I keep saying indicator. I might say indicator from now on, but you get the point. I mean chart pattern. You do not want a chart pattern that, you know, it happens once a month, maybe twice a month, and it kind of works here and there. You want one that works a lot and it happens a lot as well. So it happens daily. It happens multiple times per day. So there's many opportunities for you to trade. You really don't want the one which kind of works here and there and it's kind of you want one that works a lot. I see all these chart patterns that are so unbelievably complex, bro. There's like higher high combined with a higher low with the liquidity pull, and then you go up a little bit, then you go down, and it gets flushed down with a top down candle. It's like, bro, slow down, bro, slow down. Like English, please. So we need one that's simple, and it works a lot of the time. Another thing we need is that it should be known by a lot of people. So many people should know it. The only reason indicators, chart patterns, any of these things work is because many people see them at the same time. And they're like, oh shit, that's a bull flag, or that's a head and shoulders, or that's a VWAP. Okay, let's buy. That's the only reason it works. So imagine like there's a stock price, right? It's going sideways. It goes and it's going down to VWAP. It's getting closer and closer to VWAP. As soon as it touches VWAP, everyone's like, fuck, let's buy. And then it bounces off VWAP, it goes up. That's the only reason VWAP works, is because everybody has it on their monitor, has it on their chart, has it on their phone. That's why it's working. If only you had VWAP, it wouldn't mean shit. Because everybody would continue selling because they don't have VWAP on their thing. But because everybody sees VWAP, everybody sees the chart pattern, it works. That's another thing that you really need. Now, the last thing you need is a high risk to reward. I talked about this before. Bro, minimum 2 to 1. Minimum 2 to 1. If you can do 3 to 1, fantastic. If you can do even more, fucking terrific. But minimum 2 to 1. You need a 2 to 1 thing to be profitable. Like you just need it, bro. Right? And this chart pattern has it. So what is it? Well, presenting, drum roll please, the bull flag. It's that fucking simple. Now this image I've got from Warrior Trading. I'm gonna give credit where credit is due. I used to watch this guy so much years ago. He was amazing. Now not so much. But this is from him. It's not from me. I didn't make this amazing graphic. But this is what the bull flag pattern is. It's a breakout pattern. Now I'm gonna go over it really, really, really simply because people use all these complex words like inverse split and stop loss, all this crap. Easy. So first we have a green candle. Told you it was gonna be easy. Then we have some red candles. Now these red candles signify a pullback. A pullback is just a temporary decrease in price. That's all it is. Don't overcomplicate it. Don't do any of this shit. It's just a temporary decrease in price. All that's happening here is, let's say the stock is going up, and at this level right over here, there's a bunch of sellers for whatever reason. Maybe it's hit some resistance. Maybe it's hit $1, whatever. It's a bunch of resistance. Everyone starts selling, right? But then people are kind of like, damn, this is getting too cheap. Let me start buying it up. And everybody starts buying. And then goes up. What you want to do is, you don't want to buy it here. You definitely want to buy it like up here. But you want to buy it kind of over here, when it's kind of getting a lower. So you want to wait for the next move up. This is very cliche, but the market works in waves. It goes up, down, up, down, up. Like that's how it works. So you want to get in not at the top of the wave, but at the bottom of the wave for the next leg up. This is why it works super well. Because everybody knows it, it's logical, it happens multiple times, and the risk to reward is very, very, very good. So this is what the bull flag is. Now in terms of entries, because people always like email me about this stuff. Entry is very simple. So let's look at this red candle over here, right? We have a red candle that's formed, great. Next we need the next candle to break this candle's high. So imagine this candle like opened over here, and it went up over here. Like this is where it touched. You'd instantly want to buy because it broke the previous ones. It's not really a high, it's kind of the open of the previous one, but you get the point. You want to buy instantly when it touches over here for the next leg up. Right? But this one you can see went up all the way here and it kind of rejects it. So it doesn't beat this high. It just continues going down. This one doesn't even get close to the high. It just sits down over here. This one, however, opens. It beats this high almost instantly when it opens. That's when you want to buy. You want to buy when it goes above this level. Right over here, that's when you want to buy. And then goes up. That's how simple entries are. We're going to get into like when you should take your money out, losses, all that stuff later, but this is the idea of a bull flag. If you're going to memorize anything, if you're going to draw anything, stick up anything to your wall or whatever, hypnotize yourself, this should be the image that should be glued into your brain. And honestly, it might seem a little overwhelming, but the more you do it, the easier it gets. And after some time, you can just like see them like that. A couple other things. Red candles. How many red candles? People also ask me how many red candles. Honestly, anything more than like 3, and even 3 is kind of cutting it. Like anything more than 3 red candles in a row, I would not be interested anymore, right? So if this was like red, and then there was a bull flag, I wouldn't be interested. 2 is good. 1 is also good, but 2 is probably what we're aiming for. That's kind of what we like. Anything more than 3, if it's like 10, you don't want to, just stay away from it. And that's pretty much it. So let's look at some examples. You can see that it's super simple, bro. Look at this. Green, 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 red, 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 green. Like it's simple. And you want to enter again right over here. Right over here. When this green candle breaks the previous one's high. So right over here you want to enter. And then make money. Now there's a couple other things which can help, but I don't think they're super necessary. If they happen, fantastic. If they don't happen, it's not the end of the world, but be a little cautious. Now one of those things is volume. So you can see over here, when it was green, look at the volume. It's like up, up, up. It's good. When it's red, the volume decreases a lot. This is very, very, very good. Because this means that people are not interested. The more it's going down, nobody cares. And then it goes back up, volume increases. This is what we want, ideally. But again, if you have like high green volume and then kind of high red volume, it's not the end of the world, but we prefer to have it less red. But honestly, it doesn't matter that much. That's the first thing. Second thing, which is a non-negotiable, it needs to be above the moving average. The simplest moving average is a 9 moving average. This is the default. You go into TradingView, you search up EMA, exponential moving average. It automatically gives you the 9 moving average. It's default. Everybody uses it. It's fucking vanilla. It's vanilla. Now, it needs to be above it. That's the whole point of it. It needs to be above it. If it's below the moving average and making bull flags, that's not really, we should not enter there. If it's above it making bull flags, that's an entry. So that's the first example. Let's look at this example. You can see it opens up, goes below the moving average. This is the white, this moving average. It goes above it, and then you can see there's a red candle. So boom, now all we need is a green candle to beat this high, and we enter. That's exactly what happens. Beats a new high, I enter over here, boom, I make money. Simple, simple, simple. This one over here again, you can see that, this is actually a very good one. You can see it's green, 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 it's a red one. But you would not enter on this candle because this candle doesn't break this high. It goes high like this much and then it goes back down. So you would not enter there. Then there's a red candle. But this one, this green candle, it breaks this high. So you would enter right over here, right over there. And then boom, you make a shit ton of money. Another example over here, green, green, red, breaks a new high, boom, you enter. Right, green, green, red. You can see that this candle doesn't break this high. It doesn't break the high. So you would not enter over there. This is VWAP, by the way. It's not a moving average. This doesn't break the high, so you just wouldn't enter. Right? Green, 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 red. Okay, boom. So now we just need this candle to break this high. And then boom. Breaks it. You want to enter right over there. Goes up. That's what I mean. Last example. Green, 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 red, red. You can see this candle didn't break this high. You can see volume is also decreasing. This is what we look for. And then boom, right over here, when this breaks it, money. That's how simple it is, right? And again, the more you do it, the more you see it, the more you identify it, the more easier it is for you to trade it. In the beginning, it might take you a little bit to memorize all this stuff, but it's really simple. Honestly, it's unbelievably simple. So this is examples of bull flags that are correct. This is the type of shit they need to be looking out for, right? This is examples of it working. It doesn't work all the time. I'm not going to sit here and say it works all the time. I'm not going to like mislead you. It does not work all the time, but it has an exceptionally high win rate. It's better than all this other head and shoulders, all this stupid shit. This is very, very, very high win rate. So make sure it's effective, right? Just look at these examples. And once you understand what it looks like and a couple of factors surrounding it, like the moving average volume, you begin to be really good at it, right? Now let's look at some bad examples, right? What's a bad example? Well, let's look at this. So you can see that it's below the moving average. This white line is moving average in all of these. And you can see that it's below the moving average. It's below, it's below, it's below, it's below. But some people might be like tempted to buy over here, right? Because it's green, green, red, red, and this candle breaks this high. So maybe I should enter over here. No. Why? Because it's below the moving average. We don't want that. We need it to be above the moving average. That's the only time we'd buy. You see what I mean? Same thing over here. Look, green, 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 red, red. Oh, but if it breaks it, then out. No, you won't. You won't buy over here because this closed below the moving average. We need everything to be above the moving average. That's the whole purpose of this. Let's look at another one over here. Green, green, red, green. You would buy over here, boom, it makes money. Why? Because it's above the moving average, right? But look at a bad one like this. So, you have green, you have red, you have green. You wouldn't buy this because this is below the moving average. You need it to be above the moving average. If it's above the moving average, most likely it's in a positive trend. It's bullish, and this is called a bull flag. There's a bear flag as well, but most of you guys don't short, so it's fine. But you need it to be above the moving average because that signifies, yes, there's momentum, it's bullish, it's going up, it's good. If it's below moving average, it's bearish. So why would you want to be bullish in a bear? It doesn't make any sense. It needs to be above moving average. Now, the last example is of one going sideways. So it's just a range. You do not want to do bull flags on this at all, right? You can see that it goes sideways, 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 sideways. Some people might be tempted to like do it over here, like green, red, red. When it breaks the high, I might enter, but it's going sideways. It's pointless. It's really pointless. If it breaks these highs and then makes a bull flag, yes, that's interesting. But if it's within the range and just going sideways, it's not going to move at all, even if it is a bull flag. So that's the last example. So again, moving average, it needs to be above. It needs to be above. And it cannot be in like a sideways range. It really can't. That's pretty much it. Some other little tips here and there. If the green candles have like major topping tails, so if they have like a massive wick over here, that suggests that there's a bunch of selling pressure. So, if this wick was like all the way up here, even if it is bull flag, I probably won't enter because of how much resistance there is. Just a couple of things that you pick up along the way, but you know, it's nothing crazy. Now, risk, stop loss, take profit, all this stuff. Now, the easiest way to put your stop loss, because from your stop loss you derive your take profit, is a recent swing low. That's like the easiest way to do it. So you can see over here, we have green, green, red. The recent swing low, if I'm gonna be entering over here, is roughly this, right? Some people might argue even lower, whatever, up to you. But this is kind of the recent swing low. And so that's where my take profit, stop loss would go. And again, we're aiming for a 2-to-1 minimum. This one right here is a 3-to-1 because you know I felt confident in the stock, blah blah blah. But you can see that this one is a 3-to-1. So simply take your take profit up, where it's 3-to-1, and then boom, that's it. That don't overcomplicate your stop loss or take profit and all this other shit. Just keep it really simple. Aim for 2-to-1. Recent swing low as your take profit. Stop loss. That's it. And the last piece of advice I give you, honestly, is just to get out, like quickly. Don't be too greedy, because these types of moves, unless you're doing it on like a 15-minute time frame, a 30-minute time frame, they're not going to be massive moves. Like maybe you make 10%, 15%, 20%, but it's not going to be home runners where you're up 100%, you double your money, 1000x. So you have to get out relatively quickly, because you cannot be expecting to make 50, 80%. It's kind of 5, 10, 15%. So get out quickly. And the more you stack on these little trades again and again, the more confidence you build, and the more you're able to identify the good bull flags and the bad bull flags. Just make sure you have like consistent plays, right? Again and again, you're making wins, even if they're tiny, right? You get momentum, you build confidence. That's very important. And that's pretty much the bull flag. Now, if you're serious about trading, you want to join a community, click the second link in the description to join the Draco Room. This is my personal community. I have a bunch of people in there. Every single day I give people my watch list, so I tell them exactly what I'm trading, this exact stocks that I'm going to be trading that day. So everybody's notified of it before market opens, and you can see a bunch of people make money, right? I'm not gonna sit here and be like, oh, if you join, I guarantee you're gonna make money. I'm not gonna like just lie, but it works for a bunch of people, so it could probably work for you as well. I also do trade reviews. Anytime I take a trade, I tell people why I took it, why I made money, why I didn't make money, the mistakes, the things that went well. So I review all of my trades, etc. That's also in the community. If you want to join it, second link in the description, like I said, if you're interested. Now, don't forget, if you want to watch a video on the one scalping strategy that you need in 2025, click the video that just popped up. Again, just a quick reminder, get the free trading bundle, first link in the description. And again, if you want to join the Draco Room, my community, you're serious, you want daily watch list trade reviews, click the second link in the description to join. That's it, guys. Thank you for watching. Subscribe, like, comment, share with your family. Goodbye.